Guys, Chilipiper got going in 2016, 2017, helping SDRs book meetings. They broke 2 million revenue in 2018, went on to raise a lot of capital, broke 15 million in revenue in 2021, and then they had to make a drastic change when markets compressed. They took their team from 225 down to 150 after a team retreat in Morocco. That made them instantly profitable, or at least cash flow positive, bought them runway. Now with a multi-product approach, over 5 products in the market with a new chat GPT, or sorry, AI product coming, they continue to drive growth. They have 2,000 customers paying on average $1,200 per month with a self-serve option getting ready to launch, which we're excited about. Hey, folks, my guest today is Nicholas Vandenberghe. He is building a company called Chilipiper. Now, you might know them from their early product, which really has to do with scheduling, but they've really expanded nicely to a multi-product approach. He's been on the show many times. He went the hard route of, by the way, when I say hard route, I mean, it's hard to raise VC. He did it. I mean, he played the game. Him and Alina, the co-founder, they played the game. They got a lot done. Tiger came in with a huge round. They did a secondary, all that jazz. You know, they then had to make some cuts, reposition the business, and now revenue is growing again. We're going to jump into all of it today. Nicholas, are you ready to take us to the top?
Let's do it.
All right. I want to go back to the team retreat. You knew hours after the team retreat, you're going to have to lay off a bunch of people to sort of right size the business. What year was that again? Just remind my audience.
Just last year. It was last
Okay.
November, 2022.
Last November. And before coming on here, I want to reach out and said, hey, how's revenue going? And you told me, I don't want to say it out of our email, but you told me revenue today is about what in terms of ARR?
We're getting 30 million run rate.
And that's up from about 16 million in 2021, 2 years ago, right?
Yes, that's right. It's exactly.
It's almost doubled over the past 2 years. In the middle of a big layoff, I don't think you raised any additional capital. Is that correct?
Did not. No, we switched to being cash positive.
Amazing. Okay, so I want to dive into this story, right? So how did you get to cash flow positive?
We had to do a painful reduction in force. The story you're telling is that we took everybody to Morocco in an unbelievable trip, and we got a lot of shit for that because people say, "Look at this idiot! They're spending all this money," but it's irresponsibly. But it's not quite the way it happened. We do a trip every year. We actually just back from Iceland, even though we cash positive. We manage our costs. We flew everybody to Iceland. In Morocco, we were operating under a certain growth assumption, and so we had more than 200 people at the time in the company. As the market slowed down, we thought, okay, let's talk to additional sources of financing to see if we can continue that growth. And when we came back, you said a few hours after, it actually took us an entire week of meetings with potential investor immediately upon coming back from Morocco, where it was clear that the market's changed too much. Investors had lost appetite. So to your question, we laid off a third of the company. So
200 down to 125.
We went from 225 to 150.
Okay.
225 to 150 in one shot. And the idea was to say, we do it, it's done. We're not going to have other layers. Those who stay are in for good, and they're not going to worry. And so we scaled it to a price point where we could tell that we were going to be cash positive, right? And so that's what we did. We did one go. We did it with as much support as we could for those who couldn't stay. So we helped them find another job or place them. I wrote many LinkedIn recommendations. Because of course, when you go when you cut 1/3 of the company, you're going to have to let go a lot of very talented people. The people were performing because it's just the nature of it. So it's not like there was anything wrong with anybody. So it seemed that fortunately most of them were able to bounce back, even though the markets were difficult. I'm happy to observe that the Chilipiper has become a strong brand, and people are interested in hiring ex-Chilipipers. We call ourselves Pipers. So we see all of them finding good jobs. So it's obviously been a painful transition, but it has worked well.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right, so the teal is what a VC would pay, yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise, they sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here, and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. My first interview when I first discovered you and Alina was back in 2018. You guys at that point were making on average, you told me ARPU was about $820 per customer. I then had you on again in 2021 and that had grown to about $1,200. I'm going to guess, you haven't told me this, but I'm going to guess ARPU today is even higher than that. Or maybe flat, but because of your multi-product strategy. Can you maybe just take us through the quick product roadmap? You launched with a scheduling tool. What products do you offer now today?
Today, we bring to market a full range of product focused on what we call inbound conversion. So we exactly what you said. We started with a scheduling product, but it was already more targeted than just Calendly. Our initial product was to help SDRs book with account executives. So we already had routing, round robin, and one click. And something that people don't understand is that we give the ability for SDRs to book themselves. So Calendly is about having the prospect booking. You send a scheduling link and the prospect books. But SDR doesn't work that way. You're on the phone. You're the one who is booking. So Calendly actually doesn't serve this use case. And that's what we started with. So the early days, and we bootstrapped. We did raise money in 2019, 3 million small round, and then really in 2020.
Yep.
But so when we launched this concierge product where when people come and submit a form and they see a thank you page and companies lose their prospect in that thank you page, we build this product that qualify and wraps in real time. Now we've added a product to do automated lead distribution. So for those who don't ask for a meeting but come to webinar and all that, we call it Distro. And we're launching soon a chat product to have the full range of what it takes to convert interest into a pipeline, basically. We're also launching a new version of our scheduling product where we've thought long and hard about how AI can help that use case. A lot of people say, I want to do the ChatGPT of Calendly. And so we have something coming in the first quarter that we think is the ChatGPT or Calendly, but we'll see. It's a very cool product I'm excited about. So we have a full range of the the tools it takes to convert interest into pipeline. When you have a interesting prospect, whether it's by email, whether on your website, what it takes to be there. And
in terms of,
go ahead.
I didn't mean to cut you off there, Nicholas, but in terms of order of operations, so today, if people go to solutions, drop down on your website, you've got, from what I can see, 5 products. Your first product, though, was Instant Booker. And then what came after that? Handoff, Distro, Concierge Live, or Form Concierge?
Okay, so it went Handoff, then Instant Booker, then Concierge Live, now Distro, and soon Chat, that is not yet listed on the website, will come soon.
One of the things that I think a lot of founders don't spend enough time thinking about, everyone has a product vision, but they don't think about order of operations, sequencing, like what should come first and then second and then third. Did you guys ever debate this internally? I'm sure you have a million projects. How'd you decide what to do next and then after that and for after?
We debated internally. We have this thing called decision memo, where we list the options of how we should do things, and everybody contributes their data and their evidence that they have supporting one way or the other. So that's how we do it, and we try to be very strategic about it, but we don't always get it right. So little known is the fact that in 2020 we launched a product called Inbox. Because we thought, okay, we need to help people engage with their buyer, and there is a lot of it happening in the inbox. So let's do an email inbox. We're talking about like a replacement for Gmail, an email client. And we pulled it out after a couple of months for that very reason. It's a problem of sequencing. We're not ready to bring this product to market. We still have too much work to do, targeting marketers, targeting ops. And it was too early for us to go after the end users and helping the end users. Even though I love the product, we pulled it out because one thing is to have a good product, another one is to be able to bring it to market. Yeah. And most entrepreneurs misunderstand the challenge of bringing a product to market. It takes so much energy, and so at the time we felt that we didn't have the energy to bring this product. So to your question. Now we think long and hard about which product is closest to what we have now and most likely to succeed and relevant to our existing customer base, so that we can leverage that customer base to accelerate. And that's how we sequence them.
Well, I mean, what convinced you though? I mean, because if you go back to, I think it was like February of 2020 is when you launched, and your drop down, it was under sales execution, and it's out of inbox, beta, invite only. So you were thinking about inbox then in February 2020. When you go back and look at the thesis on, I mean, because everybody was convinced, let's go launch this product. When you go back into a post-mortem, what were some false assumptions you made back then? Was it just your capacity to handle a new product line? You overestimated or underestimated how much work it would take, or was there something else?
The false adoption, the false hypothesis we made was the speed of adoption. We got people interested, but they tried it. They didn't use it for some obscure reason, and it takes a lot of work to get people to adopt. You get this myth that Slack went up live, and all of a sudden, and maybe it happened to Slack, but it doesn't happen to the rest of us. To get a product to get adoption, it takes a lot of energy. And the false hypothesis was the level of energy we take. We thought it would just take it on its own, and that was not happening. So we just thought right now we have too much work still to do on the other products to continue the adoption. We can't afford to assign these resources to Inbox. That's what happened.
Well, and it's a tough balance, because I imagine people on your team going, okay, let's go research Front App, and let's go look at Shift. And there was a button, Todoist. There's a bunch of these other tools that were only doing this sort of inbox idea. And it looks like it's simple and doing well. And it's a logical thing for you and I as founders to go, okay, let's go take some of that market share. We have a built-in customer base, but it's hard.
You're exactly right. And what happened is that we had a lot of good ideas about that Inbox, which I still think are good ideas. But good ideas still need a lot of work to get adoption. And so it was painful to say, well, put it out, especially for those who built it. But it's the way I thought of it, as like we say in French, ce n'est qu'un au revoir, It's only goodbye, it's not farewell. So it's only au revoir. It means it's not farewell forever. It's just goodbye, and we'll meet again. Yeah.
Interesting. Okay. So, that's a product strategy. That's super helpful to understand. Update us on customers today. How many paying customers pay for one of Chilipiper's products?
Yeah. I'm sorry, what was the question?
How many paying customers?
2000.
So about 2000. Okay, great.
Mm.
And would you generally say that you're moving up market or staying where you are, mid market, SMB?
Um, Currently, we're staying where we are. We've been staying where we are mid market in the last 2 years. Um, we are launching a self-service version of our products in the first quarter, so we are going to cater to SMB more efficiently.
Okay,
So
wait, take me to that decision because that's a big. Why go that route versus going up market and only looking at 50,000 ACVs?
yes, that's a contrarian view I have actually, because you hear all the VCs saying go up market, and I'm observing how HubSpot is taking market share away from Salesforce, and they take them from the bottom, and then from Marketo and from the other, they take them from the bottom. Because when you start with a product that can serve the bottom efficiently, and you start going up, the incumbent that started up has a very hard time competing, right? The product is more complex, it's more expensive, and so I've always thought that the better way to go up market is go down market first. Um, uh, yeah, so that's contrary. I see. Oh, Dharmesh Shah keeps repeating, "Oh, we love SMBs, we love SMB. We just wake up for SMBs." And in the meantime, if you look at the product, they keep bringing enterprise features, more and more enterprise features, and they get more enterprise business, and so I'm sure he does it on purpose, like pretending that he loves SMB. In the meantime, he's going and crushing Salesforce on the enterprise side. It's like the stealth mode. So that's what we're doing. We're doing we doing a self service. We want to make sure that we serve the smaller guys out there well, efficiently for both parties, and we think these are the foundation that you will take to scale back up.
Do you feel like your product's in a place where people can successfully onboard without anyone from your team touching them or helping them or getting on a call with them?
No, we redid everything. We're relaunching.
Wow. Okay.
So the answer is yes, but only after years of investment in R&D, and we've had so many mock-ups of the design of the product that we do. Even recently we completely changed again. We launched something and it didn't quite work the way we wanted. So it takes a lot of work, but I do think we're getting there.
Yep. You did a $15 million Series A in December 2020 at a 60 million post, and then a $33 million Series B in February of 2021 before the big secondary in November 2021 at a 625 million post money valuation. This isn't just you. This is the whole market. Everyone's valuations are down. How do you talk to people about the value of their options today and making sure people stay excited and incentivized to keep building at Chilipiper?
Yeah, so we repriced the option. So I went to the board. I said, look, I believe the board idea of stock options to be motivated. So we had another 498 call to tell us the current correct price, and we repriced our options.
I see. I see. Okay, that's a good way to do it. Yeah. Very cool. Okay, so we got self-service coming up here soon. You like staying where you're at. You got a multi-product approach, 5 current products with an AI play coming up here shortly, which we're excited about. You've repriced options. The team is smaller, higher revenue per employee, and you've done all this even while cutting team size. You've doubled revenue over the past 2 years. Before we finish up here, how are you getting new customers? What's your main growth channel?
It's still the same mix of inbound and outbound. We still have an SDR team. They're great guys.
How many?
20.
20 SDRs. Okay.
Yeah. Or close to 20. And they do a really good job. And our inbound is continuing to perform. We've added, excuse me, a motion that I'm very happy with. We call it Chilipiper Everywhere. So we've done more ecosystem partnerships. So, for example, we integrated with Intercom, Clearbit, Gong, and so if you want the Gong Engage, you're going to work with Chilipiper. We integrated with G2. So if you want to list your products on G2, instead of getting leads by email, you can actually have your prospect book on the G2 site with your sales rep. So we actually moving the scheduling on the G2 site for our customers. So we have this big motion, and that's bringing up a sizable amount of business now.
So just to be clear, Nicholas, if I go to chilipiper.com/integrations, you've got over 64. I mean, this is a serious investment. You've got over 64 partners here, ranging from Candu to Clearbit to Eloqua to Gong, etc. These all require unique, obviously, building experiences. But on the back end, you're saying there's partnerships with each of these two, and they're driving you business, you're driving them business. And this is a big growth channel for you.
That's exactly right, yes.
Can you go deeper on that? So like ClickFunnels is listed here. What are you doing in terms of back channeling with ClickFunnels? And you say, hey, we'll build this integration if you send us customers, and here's how we'll send. Like, what does that sound like?
The most common integration is the ability to book a meeting when you're in the product. So with this product that you're on the phone or you're in email, and then you can click on Chilipiper to book the meeting or send a link to Chilipiper. So that's the bulk of integration. It's always about scheduling in other people's products. We also have integration for it with Sendoso, for example, where if you send a gift, then you receive the gift, and then you can book a meeting with the person who sent you. So that's the general approach we have. In many situations, a meeting needs to happen, and we're there to enable the scheduling.
Do you know off the top of your head how many unique hits Chilipiper is getting from Google organic per month? Is it like hundreds of thousands or tens of thousands? You know?
Yeah, I don't know, but it's in the hundreds of thousands. Yeah.
So you have a strong SEO play, inbound SEO, organic SEO.
We get a lot of clicks from the viral aspect of it, right? So people try it. Tons of it. People go to a website, they book with Chilipiper. So, well, that was a great experience, and they come to our site that way. So it's more the viral aspect than the SEO that's working for us. SEO, to be candid, I think we can do better, and we get back to it next year.
So just to be clear, when people book a meeting and it says this meeting was booked with Chilipiper, and then you can click the logo and go through it, you're getting hundreds of thousands of clicks per month from that logo placement.
Not from the logo placement, from the fact that the experience was good, and people either click on that logo placement or search Chilipiper or type in Chilipiper. Yeah.
Amazing.
So
amazing.
Ways, yeah.
Well, this is a hell of a story. You're always very transparent and a ton of fun to interview. Let's wrap up here with the famous five, Nicholas. Number one, favorite business book.
I still have to say Never Split the Difference, because it's
you're consistent.
Salespeople, yeah.
Number two, I would ask what CEO you're following or studying, but it sounds like you're following Dharmesh and HubSpot closely, huh?
Yes, I'm following Dharmesh closely, yes.
Yep. Number three, what's your favorite online tool for building Chilipiper?
Online tools for me. So you're comparing with what I said last time. Online tool to Chilipiper is G Suite, because we do so much on documentation. All our decisions, all our logs, it's on G Suite. So Google Docs. It seems very, very simple, but it's very powerful.
Number four, how many hours of sleep do you get every night?
I had Alina give me a book that says, look, if you want to live longer, you have to sleep 8 hours. So I'm aiming for 8 hours. I'm 7 to 8.
That's awesome. That's awesome. So married, and you had 2 kids in 2021. Still 2 kids, or is another one?
Still 2 kids.
Still 2 kids. Okay. And I think you've had what are you, 56 now? 57?
Yeah, that's 57. Yeah.
57. All right. Last question, Nicholas. Something you wish you knew when you were 20.
Something I wish I knew. So when I was 20, I didn't imagine that entrepreneurship existed. And for sure, I wish I knew that you can take that route, that you don't need to wait, and you can just start something. It seemed impossible to me, and I wish I'd known that it was actually difficult, but something was doing.
Guys, Chilipiper got going in 2016, 2017, helping SDRs book meetings. They broke 2 million revenue in 2018, went on to raise a lot of capital, broke 15 million in revenue in 2021, and then they had to make a drastic change when markets compressed. They took their team from 225 down to 150 after a team retreat in Morocco. That made them instantly profitable, or at least cash flow positive, bought them runway. Now with a multi-product approach, over 5 products in the market with a new AI product coming, they continue to drive growth. They have 2,000 customers paying on average $1,200 per month with a self-serve option getting ready to launch, which we're excited about. Nicholas, we appreciate you. Thanks for taking us to the top.
Thank you, Nathan.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company, or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them, and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.